Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Friday, May 27th, 6:45 a.m. as I'm starting the video. And as always, please run that player at 1.5x. Quick look at futures. Bitcoin off 2%, oil down 0.5%. Equities are pretty much flat, but in the green, about 0.25%. Nat gas is down 2.4%. Gold is up a little bit, 0.5%. The big thing this morning on the macro front is the personal income and expenditures report, that CPI number. And we've got Michigan consumer sentiment. Nothing too much on the earnings front. We've got Hibbard Sports. HIBB is the ticker. Didn't see much else on the earnings front. So really, I think the big thing this morning is going to be how the market reacts to that CPI print. Before I get into the charts, first of all, I want to reach out to those listening to the video that have had family members or loved ones that gave their lives for us to have the opportunity to trade, and that sacrifice does not go unrecognized as we enter Memorial Day weekend. Also, I want to say yesterday felt really, really good. It's always nice when you're on the right side of the trade where you're basically managing winning positions across the board, whether that's in energy or the indexes or FATMAAN or really whatever it is. You know, I don't know all the individual things that you trade, but for the things that we cover here day in and day out, I mean, from the levels to the gaps to the, everything was working yesterday. And those are days you really got to recognize as being special, especially in this environment that, just at the point, in recent months, just at the point where you think you got it, a massive red bar appears before you can even react. And, then you're in that whipsaw mode where you thought you wanted to be long, and then whatever gains you had the day before are taken away just that fast, and it may happen again. I mean, we've seen that before. Peter Brandt, the master technician that's out there, who I respect their work a lot, says that on a normal weekend, those last 2 hours of trade are the most important because it gives you a read on risk sentiment heading into the weekend. Does a Friday afternoon close, is it strong, indicating that people are willing to, take on that weekend risk, or are they relatively skittish and have a poor close, saying, you know what, this thing's too dicey, I don't want to hold long over the weekend. And he says double exclamation points heading into a 3-day holiday weekend where you have that extra risk. That'll be really, really important today. So stay on your toes as we head into the close, especially if early in the day things are bullish. Watch how price reacts heading into the weekend, those last 2 hours. And I think it'll say a lot about what we want to do as traders as well. So let's dive into the charts, starting off with my extremometer, the put to call ratio inverted. And you can see here the last couple of days where we had this, after we had this put buying cluster, traders are now, in relative terms, buying calls, which is what you'd expect with the market putting in a couple of nice green days back to back, but not to extremes. Here's my demarcation line in red, where just a point where above that line you can call, extreme call buying. And remember, this whole chart is a lot better at picking bottoms than it is picking tops. You'll recall that we were hoping for some real extreme readings. We did not get that. We didn't get that in the VIX. A big spike where, okay, now we can pile in. So trying to time this bottom, excuse me, trying to get this right has been tough. So my point in showing this chart is just to say it's not overdone. It's not some crazy spike where everybody has piled in. Bulls out there are still relatively cautious, and that bodes well for what we're trying to do is, getting into this, hopefully something that'll be more than a 1 or 2 day wonder, but more of a sustained rally. NYMO, monster move. We were down here in, where were we at? 40 something, 48 maybe yesterday. And we've rocketed all the way up to 78, which is really the highest that we've seen since COVID. So that is definitely a yellow flag. Let's put that off to the side and we'll discuss it a little bit later. After we go through the charts, I want to talk about strategy. NASDAQ's been lagging up here at 52, coming into our overbought area at 60. As we move on to SPY, I don't know if I made mention of it yesterday, but we had put in this bull cross in the last couple of days on the PPO momentum indicator, and I just went back. When was the last time we had a bull cross and what happened? Here we had a bull cross from relatively low position, and we got a big bear market rally from here at 415, and we made it all the way up to roughly 460. So that was a really nice pop on a similar type setup. If you see, this little wedge coming down here, broke out of that wedge, moved higher with the PPO moving up and RSI moving into the green. Here you can see RSI is at least pointed in the right direction. It's not green yet, has not moved above the 50 line, but it appears to have bottomed out and is moving towards the top of the range. So the indicators, at least from that perspective, are emerging bullish. Of course, right now it's all about follow through and how far can it go. Does everybody get scared today heading into the weekend and just sell it off? Or do they remain bullish and push higher? And I think luckily for us, we've got some really, really clear levels to think about, shoot against, set stops around, however, whatever your particular trading style is, whether you're a swing trader or, super active during the day, doesn't really matter. You're going to want to have some stops in place where you say, I've seen enough, I'm out, or to stay in the trade over the weekend. So here on the SPY daily chart, we've got a perfect line here as a toggle, and that's 405. We've got price above the 20-day moving average, which is OISA plus. The 20 comes in at 404.38. Let's just call it 404. So we've got a technical line here at 405. You can see that marked the high of this breakdown candle, this big one. I guess that was last week, and marks the top of these breakdown candles. So 405 has some significance, and we've got the 20 at 404 below, which should act as support. So I think that's the perfect pivot for today. On the upside, we've got 410 and 415 as near-term targets. If we roll over from 405, we could easily roll back into 400. Moving down to the 60-minute chart, I need to apologize for one thing. I missed a gap in the chart, and that is right here. You can see it. We were at a high, and then we gapped down, and I, for some reason, missed it. So really, you could think of it as a gap on top of another gap, because we had a gap up here at 406.41, and we had that one candle move in, but then we had another gap down. So really, from about 404, something like that, we moved into this gap and were stonewalled at this 406.41. You can see multiple touches of that level in afternoon trade where it kind of stalled out. So today we've got this 406.41 as the entry into this gap, with an objective to fill the gap. That would get us up to 411, about a $5 wide gap, and then this area here up to 415 would be a little bit, I would imagine, tougher, but that tougher doesn't mean impossible. If this rally is going to proceed to higher levels, it's going to have to get through, 415. And then I think you'd see some acceleration to the upside as, number one, more shorts are squeezed out. I think the last couple of days have put them on the run, so to speak, but I think they're still out there. And I think what would really crush them is above 415, because remember, we're not the only people in the world that have charts. They have charts too, and at that point there may be a capitulation of short positioning, and then more FOMO kicks in, and then that would provide some additional horsepower to the upside. Moving on to the Qs. Notice here we're still below the 20, which comes in at 302.55, and we're still below this high, and we're still just slightly below this breakdown candle here. Remember, when you have a big red mark on the charts, what you want to see, like a major technical accomplishment, is, have I taken out the breakdown candle high? And the answer to that question is no, not quite. And we're still a little bit below the 20, so those would be nice check marks for the bulls if they're able to have, put in a strong candle today and move above those levels. And then if that is the case, you want to keep track of this 20 that comes in at 302.50. then as long as you can stay above that, then I think the rally can stay intact. Here's our overhead gap at 302.50 up to 306. So you remember that this aligns well with the 20 that we just talked about. So if price can come up and fill that gap, then your first upside target, once the gap is filled, comes up to this 310 area. And you can see back here we had a touch, here we had a touch for support, here we had some support, so now that becomes resistance. So 302.50, 306, and then 310 will be the upside near-term targets for the Qs. And then we've got this bigger zone up here at 317.50, which will be that really tough resistance zone, I would imagine. And then above that, we'll deal with that later. So anyways, that's IWM. And here I just want to make one last point. We're trapped in this range between 297.50, 298, and 302. If we roll over today and come back below this 297, then your big line of support is down here at 293. You can see all of this support right here. It should not go below 292.50. That would really give me a short-term pause. Now there's levels down here where it could fall and then come back up, put in a higher low somewhere in here or whatever, come down here. You'd still be above these lows. You could make an argument that was a pullback and then we accelerate, but I think you really want to have a green day today and go into that weekend with a positive look, positive feel about risk appetite. And if it rolls over in a significant way this afternoon, that would dent my enthusiasm to a certain degree. IWM had a good day, 2.25%. We've broken above 180, and we're challenging this downtrend line on the daily. If we go to the 60-minute chart, I want to point out a couple things. Just here in black, just to show you, we had that classic double bottom look, that W formation. Here's, the W is in black with the double bottom, and the measured move out of this is the height of the middle part of the W, and we've basically achieved that. This leg is equal to this leg, so there's your W. So just in your a lot of technical analysis revolves around pattern recognition. So when you get that double bottom look, and we pointed out the divergence the other day, usually that's a money setup, and it certainly worked this time. So what I thought was interesting about IWM is, we came up, we blasted right through the gap, and now you can see that price consolidated above resistance. And I think that's important because it didn't come back below or it didn't get stalled below. It actually broke out and then just hesitated, sitting on support. So now I think it's pretty clear you've got a great pivot point at 183. We had a high back here. We had multiple lows back here. So as long as 183 holds, I think we're in really good shape on the small caps. And my objective for a leg higher would be this 187, 187.5 area. And one thing I would note that, you know, if we get a weak open, say that CPI number came in and the market didn't like it and, you know, did that red bar, kind of like yesterday with the GDP print. There was some wild volatility right after that print, went way down and then they bought it, blah, blah, blah. Today, if we drop down below 183 and then come back up through it, that's definitely a buy signal. Why? Because you recaptured a really important, well-defined line on the chart. So don't become all distraught. Just watch for that 183 recapture. Make sure you're long at that point, and then see how high we can finish into the day. You know, if we were to get a pullback, you know, way back into 179, you know, certainly possible if we have a red day. I think this 179 at the top of the W has got to be like your fail-safe type line. If you're a swing trader, you know, that keeps it alive. If they come back and fill this little gap from yesterday morning, come back there, fill that, you know, and then bounce, that would be okay. Not wishing for that, but certainly within the realm of possibility. You know, have an impulsive push, have a 38 to 50% pullback, fill that gap, and then go. Facebook, these intermediate resistance areas that we made a big deal about yesterday morning, didn't matter. Blasted right through, got above the downtrend line. I think this line right here, which looks to be like 189, 190, is your clear pivot. And so today you're just looking for a gap fill up to 190, 196. So that would be my objective. And then, of course, you've got a big high volume bar here. You've got a lot of reactions along this line. You know, support, resistance, big line. You break above 196, then you get some horsepower up to 202.50, and then potentially 209. Apple. Had a pre-market rug pull, came right back up before the open above 140, and then got a big push and then built a flat bull flag above the gap but below resistance. 144 is your pivot for today. If you're not in it, you should alarm, you know, 144, 144.50, and if Apple can break above that, then I think you got a run to 147, and this gap here up to 149.50. That would be my upside targets for today. And, you know, now that I'm thinking about it, if you're into lottery tickets and you see a breakout, and that's the way you want to play it, like this is just a one-day trade, you can get yourself, some 144s or 147 cheapies for today. You get that move. If everything gets bullish, you can make a little money that way. I'm out next week in June 3rd. I still have those positions. Depending on what happens today, decide if I need to, manage that or just hold them or whatever. I want to hold 143 today. 142, come back. That's okay. I got a little bit of time, but the whole key to this setup is breaking above 144. Tesla had a really nice day, 7.4%. And actually yesterday, if you were focused on Tesla, you had the perfect setup, and it's a setup we discussed yesterday. If there was opening weakness and you got a pullback into 650 at the bottom of this gap, that was a great place for an objective long. If you got long there, you got paid really, really well. And also remember what we always say, instead of being, if you missed it, instead of being pissed off and disgusted, look for the next opportunity. And that came very, very quickly, which was go ahead and fill the rest of the gap and then break above 675. So you missed a $15 move, a $20 move. You missed a $20 move. Here was your next entry at 675, and then you got a $50 move on top of it from 675 up to 720, $45. That ain't all bad. So this looks good with a little bear flag. I think you can be long against 700 with a pivot at 720 for a breakout towards 750. So Tesla had a couple of really nice days off of the floor. Microsoft didn't set the world on fire, 1.29%, but at least it was heading in the right direction. Bumped its head here at the top of the gap for quite a few hours. That level is 66.50, 67 area. If it can break that, then I think you got to run up towards 273. I'm long the name for next week, June 3rd. So that's what I'm hoping for. Do not want to see it lose 264, otherwise down to 260, and those are the levels there. Amazon, free 50 club times 2, right? We got a $100 move. It's up 86 on the day. Talked about buying this breakout above 2100. You got a fast move. Where are we at? No, it's 2150. Buy the breakout. You got the move up to 2200. Then you got the move up to 2250 at the bottom of the gap. So that was your free 50 club times 2. Now you got another 50 here on a gap fill, and then above that, I think you can get up to 2400, where you had these prior lows. So you want to hold 2200, you want to break out from 2250, and then get that gap fill to 2300. That's another lottery candidate, if you're into that sort of thing, just always keep in mind that most of your lottery tickets end up on the floor. So don't play with money you're not happy to lose. But on a Friday, if you get a runner in Amazon, it's the cheapest, calls you're ever going to get as far as, an Amazon where, if you're shooting for something by the end of the day and they're going to expire worthless, of course, there's no time value built in, or very little time value built in. Just always remember, when you're on the same expiration day, you're going to watch, that thing will decay. You can put it, you can watch it on your watch. It's decaying so fast. So it's got to be moving in your direction, and it's got to be moving fast if you get into that thing. Google, nice day, almost 2%. What I've done here, and you can do this all the time on your gap trades, is mark a halfway point, and that's what I've done here. A level halfway to a gap fill, and so yesterday we filled half the gap up to 21.75, and what you're hoping for and looking for today is to go ahead and fill it, get another $50 out of it from 21.75 to 22.25. On the downside, you got to have the bottom of the gap hold. It's just that simple. You need to have, on any kind of pullback, you need to have 21.25 hold, or else you're back into that prior trading range, and that would not be a good thing. Netflix inline 2%, 187.50 remains your pivot. You need to hold that level if you're long. Semis, great day. We talked about this yesterday. We talked about, NVIDIA was going to open low, which it did, pushed semis down, and then they bought it up, and SMH right along with it. You had opportunities to get long on the re-entry of the gap, or this 228 level, or the exit from the gap here at 230, and then it was just off to the races. So now today, you've got a nice pivot right here, right around 236. If it can hold that, opens the door to 240, 241, and then you've got a bigger gap up here that starts at 243. On a pullback, I would want it to hold 233 right here, where you've got a cluster of volume over price. Here you can see 233 acted as resistance. Same thing right here. I would want to see 233 hold on any kind of pullback. And if you're not in the trade and you want to be, and you get that pullback to 233 where it looks like it's going to hold, you've got a real objective level there for a long with, a stop just below, and then hope for a reacceleration higher and then a breakout. Quick look at ARK. We filled gaps below, and then they've been on a steady rise. ARKF, you should have 1850 alarmed as a pivot if you're interested in trading that, and then you've got an overhead gap as a target. ARKG never broke down, still in the trading range. 31 and 32.75 is the range, and if you got that 32.75 alarmed, you can take it long if you get a breakout. ARKK, right up towards the top of the range, right below this downtrend line, I would have 43.50 alarmed on the upside, and I would have 41 alarmed on the downside. ARKW, still in the range. Same kind of look as ARKF. Came down, filled the gap, found support at the bottom of the gap, and has moved back up to the top of the range. And there's yet again another example of that principle we always talk about. Number one, the gap fill. It broke the top, filled it, and then when it came back up, notice the muscle memory there at the bottom of the range or the top of the gap. You had all this support here acting as resistance. Took it quite a number of hours to break through, but once price broke through back into the prior trading range, right back up to the top. So that's a really nice principle to commit to memory, in your pattern recognition, breaking into a prior trading range from below, your target's always the top of the box. So let's do a little bit of strategy here. I think there's more gas in this rally. At least I'd like to think so. I think positioning is still offsides. We've still got month-end buying that's going to occur. Hopefully some today. Hopefully some Tuesday into month-end. That NIMO and NAMO readings are definitely cautionary. So while I'm hopeful that this rally can continue to squeeze out shorts, rally into month end, it comes with yellow flags of the NIMO and the NAMO. So what I'm going to do today is hope for the best, hope that the rally continues, but with stops in place, as we've discussed. And if we get a rally into the close, kind of finish on the highs, or it's obvious we've had a good day, what I'm going to do is make sure I go to the bank on some stuff heading into the weekend. And if, kind of take all the positive deltas off, maybe reduce position size a little bit. But I think you want to go to the bank today if you've been riding some winners up for the last, day and a half, 2 days, however you're positioned and whatever you're at. There is going to be weekend risk, holiday 3 days instead of just the weekend. So I think you want to be prudent is what I'm trying to say. Don't go off the deep end, I wouldn't think, because we all know how to buy stuff. And if it's apparent that levels are being recaptured from below into next week and the rally extends, we know how to do that. Get through the weekend, get through this CPI print. We've got the Fed coming up in just a couple of weeks, maybe 3 weeks kind of thing. So there's that in front of us. So, but the bottom line is I'm still bullish, short term, bearish, long term. This is a bear market rally, but, but they can be vicious and they can be, come out of the blue and catch shorts that have extended their stay too long, and squeeze them until they're out, and then, rip it back down again after everybody has capitulated on their short bearish end of the world predictions. So that's how I'm going to head into the weekend. I will certainly keep you posted today as the day unfolds on exactly what I'm thinking, and I will I won't leave you hanging on what I think going into the weekend. So let's leave it there. If you're new to the channel, thank you so much. You can obviously tell this is a technically driven channel. I'd like to think that if you stick with me, you will come to trust my levels. I think, that's my calling card, giving you objective levels to trade against, along with some coaching to go with it. If that appeals to you, hit the subscribe button, hit the alarm bell, give me a like. That would be great. You're certainly welcome and encouraged to leave a comment of how it's going, or if you want me to cover off a specific stock and or a specific sector, happy to do that. Jump over to the show notes. You'll find a link to drop in your email address. That way you'll get these midday notes, trade ideas, stuff over the weekend right to your email box. Be great to have you. And you'll also get an invite to our trading room. So let's wrap it up there. Let's see how we wrap up the week. Let's hope for good things and be ready to react on unexpected, unwelcome, bearish developments. Stay really nimble. This market throws stuff at you you're not expecting. So stay really nimble. Don't get married to, this is a bull market rally and we're going up another 20%. We can be positioned for that. We can hope for that. But if it doesn't materialize, we can't cling to that, for days while the market takes back all our gains. So stay nimble. Make sure you go to the bank today on your winners, even if you're going to stay long. Take those deltas off, roll them up, tighten your stops, and be ready for anything. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.